Good morning, everybody. I hope the day is treating you extremely well. The chart that we've got up here is of the S&P 500. Now, usually, if you guys have been following these videos, I've got RSI, I've got the MACD on the charts. I also have the 10 and the 20 moving averages, and we're looking at a bunch of different things. And in this week's video, I'm going to keep this as simple as possible. There's only two things on this chart. There is the blue line, which is the 50-day moving average, and there is the purple line, which is the 200-day moving average. We're going to be talking about these two moving averages in depth in today's video. It's not going to be very long, but today's video is extremely important because a major development has happened in the S&P 500. Now, this purple line is the 200-day moving average. That is the sum of the closes over the last 200 days. And what we have seen since right here in the chart, back in the middle of May 2016, that purple line has been moving higher. Every day, that 200-day moving average has been higher than the previous day, which means, the market subsequently should be moving higher, which is exactly what we have seen over the last 2 years. However, today, for the first time since Donald Trump was elected president, we have a declining 200-day moving average, which means the sum total closes over the previous 200 days is headed lower. That is a major development. And to zoom in real quick, we can see this 200-day moving average. Yesterday, we were at 2,768.27 on the S&P 500. Today, we are at, for the 200-day moving average, 2,768.11. So we are actually moving lower. That's a major concern, and that is a major change of character, and it is one that we have to pay attention to moving forward. Now, I'm going to back this chart up, and I'm going to look at this on a weekly basis. For all intents and purposes, the blue line is now the 50-week moving average, and that is very, very similar to the 200-day moving average. And the reason I needed to back this chart out is because my daily charts don't go out 5, 10, 15 years, and I want to take a look at longer term what happens when we break underneath of that 200-day / 50-week moving average, when it starts to decline. The first time we see a decline comes right back in here, 2015, right before that big and right during that big sell-off that we have. And then we see it in declining once again right here. And again, we have a couple of months of very difficult trading environment where the market's headed lower. Then, again, we turn up right here, and we've moved higher ever since. So in the past, when we have broken the 200-day moving average has started to decline, that has led to some very choppy environments, very choppy market environments, and ones where we can see some pretty large sell-offs happen from them. Now, if we back this out even further, all right, I need to put the 10 moving average back on here, and now we're going to be looking at the monthly chart, because the 10-month moving average is essentially the 200-day moving average. And let me clean this up so we don't have the RSI and the MACD on here anymore. So it's just as simple as possible. And actually, let's remove that 20 moving average on there as well. So the 10-month moving average is essentially the same as that 200-day moving average and that 50-week moving average, right? Decline right in here, and again, you can see that very choppy period of trading. The last time we had a decline before that was all the way back in 2011. Again, months of very difficult trading. All right, and then the time before that, when the 200-day moving average, 10-month moving average, 50-week moving average started to slope down, was all the way back in here before the big collapse in 08-09. Now, I'm not saying we're going to get this large type of collapse because we're underneath, or the 200-day moving average is now declining. That's not what I'm saying at all. What I'm saying is we are now entering a period where that upward movement that we have seen over the last couple of years is going to be a lot more difficult to continue to accomplish. We're going to enter higher volatility, choppier trading, and the sum total closes over the last 200 days again, is now slanted to the downside. So, what are we paying attention to here moving forward, and what should we be really concerned about? Well, The biggest telltale sign that we are going to probably continue to head lower is if that 50-day moving average crosses below the 200-day moving average. And we can see that take place if we're looking at this chart back in January of 2016, where that blue line crosses underneath of that purple line, and that's where we have that sharp sell-off to start that year. Bulls really need to see this 50-day moving average stay above this 200-day moving average. They need to see this line of support really hold right here, and they need to get the price back over that 200-day moving average so it's no longer declining, but once again rising. So those are the pieces that we're paying attention to. But again, things to keep in mind. Since Donald Trump has been elected, we have not had a declining 200-day moving average until today. That's October 24th, 2018. And that is a significant change for the overall market. I hope you guys stay safe out there. Have yourselves a fantastic rest of the week. As always, I'll be back next week. Take care.